any advice you'd have for somebody who is new to the space, looking to get involved, what advice would you have them from your perspective? I mean, you own parks. You own parks, you manage parks, you broker parks. What would be one piece of advice you'd give to somebody starting out?
Don't be afraid to go after larger returns that are farther from home.
And we're back on the MHP Exchange Podcast. I'm your host, Frank Rizzo. Joining me is my partner, Eric Busuttil. Eric, how are you this morning?
I'm doing good, Frank. Good morning.
Great to see you. Eric, before the show, gave me the best compliment that we've had in the 10 years of us working together was, Frank, you look okay this morning. So thank you very much. Puts me in a good mood to start the program. We have a great program today. We love bringing to you people inside the industry that if you're interested, you need to know or you need to know about. And we have somebody here who's a very special guest that I think is going to enlighten everybody here who's listening. But before we get started, we want to tell you that the MHP Exchange podcast is brought to you by the MHPExchange.com, your place for opportunity, news, education, and entertainment. You can find our podcast there. You can find listings there. We have Chat MHP, the industry's only AI-specific personal assistant for you to answer any of your MHP-related questions. And you can see our program, Trailer Park Turnaround, on the MHP Exchange. And if you like what you hear on this program, right? Not to say here, and you're listening on iTunes or Spotify, make sure you subscribe, make sure you rate the program and track it. That helps us as well. So please like, share, and review. We'd love to hear your comments and feedback. But joining us today, and I'm going to like this too, because he's a fellow New Yorker who finds himself in the MHP space. So he's already got a win in the column as far as I'm concerned. We have a gentleman from Sands Investment Group, Will Capone. Now, Will is a broker in the MHP space, but before he got there, he worked in the maritime industry, and he started his journey, rehabbing single-family residences, sold rental properties, and he was with a management company. And that management company kind of led him into the MHP space, and I'm going to let Will kind of talk about that transition, how he finds himself here, especially coming from New York, where I think Long Island probably has a few mobile home parks, but not as much as where he's focused in, and he's relocated down to Florida. So with all that being said, Will Capone from the Sands Investment Group, how are you doing today, Will?
Good, Frank. First off, you look fabulous. You got a nice glow about you today. So hopefully that'll keep your positive momentum going.
Well, thank you, Will. I put a little extra, gel in the hair today to part it over.
You got the Staten Island shine going on. I like it.
Got the Staten Island shine. Thank you very much. But Will, why don't you enlighten people who aren't familiar with you or the Sands Investment Group? Kind of tell us a little bit about yourself and your background and kind of how you found yourself in the MHP space.
Sure. Yeah. I mean, I've been a serial investor since I was probably in third grade, flipping candy, warheads in the streets of Long Island. That progressed into, when I started making real money working in the workforce. I started in the maritime industry. I had 6 months overseas to educate myself, a lot of downtime, a lot of travel. And then I had 6 months home to invest and become real hands-on and active in what I was doing. I would come off those ships or tugboats, money in my pocket and a lot of ambition and knowledge. I probably read 2-3 dozen books on real estate investing. Before that, it was all stock market learning. Had some tailwinds, in the mid to early 2000s in the real estate space, like a lot of us did. And, just went at it pretty hard. And, I bought my first investment condo in Florida and just kept expanding from there. I was exclusively in Florida up until about probably 3 or 4 years ago, and then I started going a little further. I ran into knowing about you, Frank, through Alabama. I owned a park in Alabama. I transacted a lot in Alabama. And what brought me there was the high cap rates. Still a very good place to invest in real estate, as you know. Low operating expenses, favorable operating conditions. And yeah, I started crossing paths with you on a couple deals there. I think in South Georgia, and we just built a relationship from there. I currently own a park 20 hours from me in Missouri, but I've owned parks in Florida and Alabama before. And you know, my personal investment strategy is to invest in all these states and to continue to grow that. As a broker, I provide a ton of value to our clients by knowing intimately hands-on operations of MHP and RV parks. We try to source as listing inventory only what we know our buyers would be interested in. So, you know, I've had the opportunity to hand Frank a couple deals that were coming to market, off market, en route to market, never made the market. Frank's made fantastic offers on deals that the sellers just declined, which is one of our challenges in today's you know, operating environment, which we can elaborate on.
All our offers are wonderful offers, by the way. Well, like
Of course,
that's why we made them. They're wonderful offers, right? So that's
of course.
so and here's what, and we've, you know, here's where I think there's a maybe a difference, right? And maybe you can elaborate, like, how does owning a park help you as a broker when you're talking to people either on the sell side or the buy side? Like, how does that
Yeah.
experience level kind of translate moving that forward or help you in your representation on either path?
Yeah, absolutely invaluable. Nothing beats it. It's our distinct edge. I know there are other brokers out there that own parks and broker parks. It's fantastic. There's no better way to talk through a purchase decision with a buyer than from hands-on operating experience. I've had buyers tell me that the only reason they're buying a park is because they met me and I made them feel comfortable with the transaction. And it's so valuable that our growing team here at Sands that focuses just on mobile home and RV parks, we're opening ownership opportunities up to them. You know, I want them to have something invested in a mobile home park, which we feel is the absolute best investment vehicle in commercial real estate. Obviously, the highest returns, you know, highest cap rates we're seeing in the space, multiple ways to make money doing it. Any park you can make money on. There's just, sorry.
No. Well said. And I mean, even in speaking to the sellers, though, I mean, you spoke about, you know, where you bring value to buyers. You know, a lot of these sellers are individuals who really don't know what these parks are worth, right?
Sure.
You know, the last handful of years, the space has become a lot more, you know, notable to people. And, you know,
Sure.
I'm sure you're educating these sellers on what the actual value is and, you know, why some things could work or don't work. I mean, you know, the pricing, you know, in the last, again, handful of years have just become, I don't want to say ridiculous, but a lot, you know, more closer to where values are. And, you know, a lot of these prices are too high, right? So
Sure.
I'm sure you're bringing extreme value to these sellers and putting properties out there at, you know, realistic numbers.
Absolutely. That's our absolute intent. Every seller is different. You know, we want nothing more than to transact their park for them and make them happy and do it in a stress-free, limited involvement situation for them. But they have to be realistic on pricing. You're right. If we bring something out that's a little expensive, you know, we're not beyond trying to show that value for the seller. But those could be challenges that we run into. At the end of the day, if they want to sell, they have to be realistic about pricing. And, you know, we try to paint that picture as best as possible. If we're talking about selling someone's property, I always have in my head, and I like to disclose it to the seller, who the ideal buyer is for that property. We don't want to try to sell anything that there's no buyer for. I mean, that's just treading water. Most mobile home parks is a buyer for anything if it's priced right.
And I think we saw in the commercial market last year, right, where transactional volume was down almost 70% across a broad spectrum of asset classes. But I think if you took commercial real estate as a whole, the volume was down, and it's setting seller expectation now. Like, how are those conversations now with an owner who, you know, obviously if they would have exited, 18 months ago with rates at 3.5%, 4%, they were looking at a different price point. And now where rates are, almost double, right? How do you set that expectation from day one? How do you walk them through the rates have gone up, that affects pricing, but here's what you could do to kind of maximize the value that you do have.
Sure. Some sellers see that, and that can be an easy conversation. Some say, I got offered $2 million 2 years ago. I know that's not realistic anymore. What do you think is today?
Got it.
It depends on the park and how you could sell it. Some parks you can get bank financing. Some you can only purchase with hard money or cash. Those difficult to finance parks lay up pretty well for seller finance proposals. And we have those conversations with every one of our sellers. They can often get a better price if they do offer to seller finance the property. And if there's value to be added there, if rents are half a market rent, if there's vacant pads, if there's some cleanup work that can be done to increase tenancy. We look at all those factors. We look at land value. We look at median home price. A park in Miami, the land may be worth more than the park. So that could be a 2 cap rate deal because the land is there, and odds are the buyer is not going to be a mobile home park operator anyways. So every market is different. Tertiary markets that I know you like to transact in, Frank, are more cap rate plays and median home price. That's kind of our pricing guidance there. But the reality is some sellers still want sky high prices. And, we do select a few deals that we will offer off market to, select group of our clients like yourself, Frank, that we don't try to get anyone to bid against. We just see if there's, an opportunity there for someone like yourself. And then we go back to that seller with feedback as well. And, then we may be able to, if you don't transact on it, we may be able to shape our pricing guidance as well.
So as you go into this year, and I've started to see, and Eric and I have had this conversation, we're starting to see some shifts in the marketplace, but what are you seeing you're obviously talking to owners and you're talking to prospective purchases. What are you seeing in shifts in the marketplace and expectation or outlook for 2024?
Yeah, we're kind of at an odd point right now. I feel like it was easier at the end of last year to convince sellers to do seller financing, which helped drive some deals forward. Right now, they're a little hesitant in that regard. Interest rates are still, for your best financeable deals in a mobile home park space, you're in the mid sevens. So that, you can use that as leverage for seller financing still. But as far as deals we have and offers we've been getting in this space, we have full price offers that sellers aren't accepting. For some odd reason, and this is not just in the MHP space, our office in Fort Lauderdale, we have teams that do many facets of commercial real estate. In the self-storage, boat and RV storage space, they're seeing the same thing. So you're getting these sellers to a point of price expectation. They're signing a lease agreement with the price, and then they're not taking the offer when you bring it to them. Why are they stalling? I don't know. I see the market remaining flat right now. Interest rate decreases are probable, but I think a lot of that has to, stem around, the end of the year and into the beginning of next year, where we may actually start seeing some of that. But maybe sellers are holding off because they believe that's going to happen, and they believe that may support some of their pricing or a better price. We have buyers. We have more buyers than we got inventory. We just got to put the right inventory at the right price in the market, and then it would transact.
I think, in my opinion, and you said it right, it's not just the MHP space, but it's, pretty much every space across the board, but it's a few reasons. Number one, if you're selling your property, what are you going to do with that money? Right. So if you buy something else, you're buying it at a higher interest rate, and you're going to run into the same problem, with the next seller, right? Wanting high prices, right? And, a lot of, these commercial properties and MHP properties, the numbers, just don't make sense as far as financing wise when
Right.
those are very high, being that these interest rates are so high. So I think that's a big factor in why people just and right now, like you said, we're at a time where people are just nervous, right? They're thinking that, to get this economy going forward, rates have to come down, right? We need to free up some money for the property owners to refinance, pay off some debt, move some money around. Money is just very stagnant right now, right? People's credit card debt is high. So, making another move to another property is, very difficult.
Yeah, you almost got to catch somebody at the end of their investing life cycle,
Right.
right? For that to make sense. And that's we're seeing people like that transact. We're seeing people with health concerns transact. We have a large deal with an LOI sitting in front of it. It's a $35 million deal. We have the LOI at $35 million. That's what the seller told us he wants. And now that that's in front of him, he's been sitting on it for 2 weeks. He's like, I didn't think you guys would be able to do this quick. And then he's like, we have, we want to buy 1,000 to 2,000 acres. We're afraid we're not going to be able to find that in enough time to nominate that property. And so I had a line LOI that said we'll give you enough time to do that. But that's an objection. Like, he's going to walk away with a massive windfall. He needs a 1031 exchange that money. He's middle age. He's not 90, but it's stuck. He told us he wants 35 million and he won't.
It is also that, listen, they're saying if rates come down, which they should, right? Well, what's going to happen, or what are people expecting to happen? Prices to go up even higher. So
Sure.
that person who's got a $35 million LOI in front of them, they may be thinking that, hey, if I wait another year and these rates are down, maybe I'm getting 37 million. I mean,
but then when you do
Yeah.
the exchange, whatever you're exchanging to, it's all relative, because
Right.
you're going to exchange into something, and that's going to be worth more,
Exactly.
at the same time. So you're correct. But I think that's
it's a combination.
but it's being very one-sided on it. But you guys in particular, over the last few months, and obviously, Will, we're in contact regularly, not just for this program, but we speak to deal makers and throughout the region.
Sure.
But you guys have had some velocity in the space recently. You've had some success getting some new product
Sure.
to market. Have you guys been doing something different in terms of your outreach? Are you doing something different in terms of your growth to make that happen? Or are you just seeing maybe a shift that's happening in the marketplace itself?
I was a solo operator at a smaller boutique brokerage before I came over to Sands. When I came over to Sands, they gave me the platform to really elevate and start growing out a team. So, I'm bringing on team members that want to be the best, want to work, want to find the most deals, show up on time, started showing up earlier, stay later. We are grinding. So the velocity is nothing less than just grinding. We expect that to keep increasing. And again, our strategy and our focus is all centered around what we hear the market telling us they'd like to purchase. In the states they'd like to purchase. So we're generally over 50 units in our prospecting. Our whole basis of prospecting is to develop rapport and build a relationship. All I care about doing is finding a way to relate to a seller on the phone. If there's an opportunity there to sell this property, great. If not, no hard feelings. It was great talking. But we have dozens of clients that we've been working with since the first transaction we've done with them on multiple transactions, because we build relationships, and that's what everybody on the team is focused on doing.
So there's two things that I hear out of that, right? And two things that I know that it goes back to. One, real estate is never about bricks and sticks,
Right.
or metal homes, right? It's always about people.
Right.
And the second thing, and the beauty of this space and this business, it always comes down to the person that's willing to put in the effort. And in any market, when people say, the market's tough right now, right? Yeah, it was easier, right, for anybody to walk in. You didn't have to be a genius 4 years ago. If you would have bought a piece of property in 2020 or 2021 with rates going down, anything went up, right? It just money was looking for a place to go, and of course, you look like a genius when the price went up. But
Sure.
when things get challenging, that's where people kind of separate themselves, right? And when you're willing to put in the work and willing to put in the effort, there's always a transition that's happening. There's always opportunity out there for those of you out there looking for opportunity, even when it's a little bit more challenging, and you have to be able to do that. And that's the beauty of this business. The only thing that stops you is you.
Listen, there's nothing like hard work, right? You have to work hard, right? And I think that this market is you're going to see who gets through this market. I mean, you're seeing a lot of, real estate brokers, mortgage brokers, and professionals leave the space, right? Because, like you said, these last, 4 or 5 years, I mean, if you were in the space, I mean, you were on the phone with somebody doing something. You have to find somebody that's looking to do something, and you have to develop a relationship with them. You have to get them comfortable, and you have to be playing the numbers, like, which means getting to work early, leaving late, going that extra mile to procure a deal, going out, meeting someone. This market is extremely difficult, in all sectors of,
Well, challenging.
commercial and challenging.
I wouldn't say that it's challenging.
Well, I mean,
Yeah.
difficult and challenging.
Challenging.
I'd say it's instrumental. We end a lot of our conversations on the phone with sellers saying, when's a good time to come and shake your hand? A handshake, 99% of the time we get that listing when we come and shake their hand. And we see on average 35 to 40 parks a month.
And Will, I mean, like you said before, the person who's looking to retire, or the person who's had the park for 30, 40 years, these are older individuals, right?
Sure.
They prefer doing business face to face, right? Other than emails, social media, they're not following you, or, you go out there, you shake their hand, you got to get them comfortable. I mean, that's the best way to do it.
Yeah, absolutely.
Are you seeing any, we know there's $1.4 trillion in the commercial real estate market that has to be refinanced over the next 24 months. Are you hearing from any owners, or maybe some operators that got into the space recently, who are having some challenges with some rate resets? Maybe they weren't operating. Maybe they underwrote too aggressively with, too much pie in the sky expectations. And are you seeing any pressure from them saying, hey, we've got to come up with some sort of solution here? I mean, are you starting to see that?
Absolutely. I think we've been seeing it since last year, to be honest with you. And it can get amplified by that happening to a private equity group, with investor funds. We've seen that in a couple of cases. There are deals that we have listed that the sellers don't want to take a loss, but the reality is they're not going to make that balloon payment if they take a loss, and they may, they're just tough deals. So we're trying to get creative on that, with some seller carrying those situations. But we got a couple deals that, the sellers, do have to refi at a higher rate, much higher rate, double in some cases, or sell at a loss.
Maybe we could get them later.
You wouldn't be. I would have sent it to you already. The two I'm thinking about.
So, Will, any advice, right? So we look at this program, we get some people who are just starting out, some people a little bit more advanced, but any advice you'd have for somebody who is new to the space, looking to get involved, what advice would you have them from your perspective? I mean, you own parks. You've owned parks, you've managed parks, you've brokered parks. What would be one piece of advice you'd give to somebody starting out, or intermediately, who that you think they should carry with them to be successful in this space and investing in this space?
As an investor, or as a new broker starting out?
As an investor.
As an investor, don't be afraid to go after larger returns that are farther from home. If I would have just stuck to South Florida and tried to become a mobile home park investor, I don't know if I'd be at the level I'm at. You got to go the distance, and your biggest fears are probably not that big of a deal in reality when it plays out. I know you own parks out of state. I own parks out of state. There's ways to do that, but as a mobile home park purchase for an investor, one of the least riskiest assets. You know, some people think if something's rough and tough that is risky. That's a massive opportunity to add value. You know, if you buy a park with 3 units occupied out of 10, well, you start rehabbing and occupying those units, and you know your returns are doubling, tripling. Your risk on that initial investment is quite low. You know, if you follow the path and get it done.
That's great advice. I think you have to get comfortable with the market you're in, and you have to get comfortable operating remotely. And I think
Sure.
there's some comfortability factor you have to have with that, but you can't not be in this space with the expectation that the mobile home park that you're going to invest in is going to be around the corner from you, right?
Of
If you want
course.
to be in the space, you've got to get comfortable with the fact that if I can build out the team, I can operate remotely. And I know you've got a great RV park in Missouri, right? I mean, we were
Yeah.
discussing that, you know, that you've got a really home run of an RV park operating over there.
Absolutely.
Any last bit of advice or comments that you want to make on the state of the market?
On the state of the market, I think we're pretty flat right now. You know, it just comes down to putting properties in market at realistic price expectations. There's buyers waiting. I mean, I know you're waiting to buy deals. You know, we just have to bring the correct stuff to market at the right price, and it'll transact. But there's opportunities. You know, rents seem pretty market level. Rents in a lot of the markets don't seem to be increasing. Have you seen that, Frank? I'm assuming.
So, you know, I think people saw huge increases in certain areas, and I think that's slowed down. Now, if you're buying a community that has, you know, well below market lot rent increases, you have room to go. But I don't think every community, and I've seen some underwriting, and I've seen some deals in some markets where people were getting $575 a month lot rent, which is above national average, and they're markets that command that, and I don't see how you have any room for growth there. I think you're capped at that number for a while, and you have to be aware of that. So I don't want to go into specifics of deals, but secondary markets where $575 a month. We looked at a deal that was secondary market where the owner had they were claiming $575 a month lot rent in a market that didn't command that. It wasn't like major market. So I think you're going to have some pressures there, and you just have to be conscious of that. I think everybody got super aggressive in early 2020, or not everybody. We didn't. I think some people got aggressive in their underwriting, thinking that I'll have double-digit rent growth every year, and I don't think that's.
I don't think we're having any rent growth this year. You know, I actually pulled back in Alabama. You know, I think I hit a little stop up there last year and pulled back $25 a month. But yeah.
That's knowing your market and knowing that, you know, you want to keep an occupied space. Will, if anybody wants to reach out to you or get to you directly, what's the best contact? What's the best way people can reach Will Capone? Sure.
So my direct line is 954-723-8342. And my email address is wcapone@signn.com.
And what's the website, your company website?
It's signn.com, as in triple net. Here at Sands, they're working on supporting us in the mobile home and RV space. We have added more categories to the website. We're going to be at MHI in April. If anyone would like to shake hands, we'll be at booth, I believe, 720. And looking forward to talking to as many people in the industry as possible. Happy to help out anyone, whether just starting out or someone that's seasoned that would like to talk through something. Here for anybody in the industry. Thank you very much for joining us today. And we look forward to talking to you again. We know that, you know, Will's got some listings out on the MHP Exchange. You want to check that out as well. This has been another great episode where we look to bring to you industry movers and shakers, people you need to know if you're getting into this space. Will Capone from the Sands Investment Group is definitely one of them. This has been the MHP Exchange Podcast. Any final parting words?
Thank you very much, Will. Appreciate your time.
Pleasure, Eric. Pleasure, Frank.
Thank you, Will. Talk to you soon.
Take care.